If you have any credit cards, mortgage payments, or auto loans, you need to listen to this. Interest rates are predicted to trend downwards this year, 2025, as the Federal Reserve continues its rate cutting efforts. But the pace of the cuts will slow down due to the persistent inflation and strong economic conditions. Now, consumers can expect marginal relief on borrowing costs across mortgages, credit cards, and auto loans. However, if you have any money in your savings account, the savings account rates are expected to dip slightly from their recent highs. Hello, if you're new here, welcome to Daytopia Wealth and Research, where we transform your everyday news into financial opportunities. My name is Dr. Awosun Yusuf. I'm a qualified financial advisor and a chartered accountant for over a decade. Now let's go into the market update. The Fed reduced rates 3 times in late 2024, lowering the federal fund rate by a full percentage point. In 2025, officials anticipate 2 additional rate cuts, likely to bring the benchmark to 3.5% to 3.75%. However, burst economic data and inflation above the 2% target may slow further reductions. This means that the Federal Reserve is expected to keep interest rates steady for now, with only a few reductions throughout the year. As a result, loans, credit costs will become slightly cheaper, but not enough to make a big difference for most people. Right, but let's go into the financial opportunities. So number 1, the credit card rates. So if you have any credit card debt, you might notice a small reduction in how much you're paying in interest. However, the drop is not enough to provide a major relief, at least not for now. So if you're carrying a large balance, or if you're carrying any form of balance, it's still important to focus on paying off your debt. Now for mortgage rates, for home buyers, mortgage rates are expected to remain steady in the 6% range with occasional spikes. What this means is that monthly payments on new mortgages won't be drastically cheaper. So if you are already on a fixed mortgage, your rate won't change. But if you're on a variable one, then this applies to you unless you want to refinance or move to a new home. For auto loan rates, car buyers will see a small decrease in interest rates for loans, but with high car prices, so the savings may not be noticeable. Monthly payments on new and used car loans will remain relatively high, so it's wise to shop around for best deals with regards to buying a new car. Lastly, savings accounts. Savers have enjoyed high returns on savings accounts in recent years, but these rates will gradually decrease. However, they'll still be higher than inflation, making savings account and certificate of deposit a good option for growing your money. So in conclusion, borrowing costs will ease slightly, but you shouldn't expect big savings in 2025. Whether borrowing or saving, it's a year to stay financially cautious and plan wisely. Thank you very much, and see you